Thank you very much for that introduction, Tracy. Nice to see you, by the way. You know, as we can only see a few of the people. Chuck, it's okay if I go first again?
Absolutely, go for it.
Okay. So we'll go for the share screen. Okay. So finally, at about 3 o'clock this afternoon, we are arriving at one of my favorite products, which is in the family of the pulses. I'll be talking this afternoon about lentils, chickpeas, and fava beans, and Chuck will be following that up with peas, soybeans, and beans, I believe.
I'm sorry to interrupt you. You don't have your shared screen on.
Okay. I thought I did. At least it was circling. Let's try that again. And
yep. Now you're good. Thank you.
Okay. So we will be starting with lentils on the pulse side this afternoon, which is one of my favorite topics, and certainly also a very buoyant one this year, as we have seen in some of the commodities. So I'll talk about some of the numbers, the balance sheets, how we're doing in terms of exports, and the outlook for the remainder of the year, and perhaps going into the next year. In terms of outside markets, the women and gentlemen who have watched the oilseed and wheat presentation, I alluded to some of these things, and I just have 3 quick slides because it pertains to pulses as well. Just mentioning that contrary to some expectations, in spite of having endured 1 year of COVID, markets now, demand outlook has been very, very good, partly because of the income subsidies that have been paid and very good consumer follow-up in spite of the close down of the hospitality industry. So on pulses also at the bottom, we have seen an extremely strong showing of shipments supported by the next slide actually in the first 2 quarters. And I just mentioned that it will probably be slowing in the 3rd quarter. Some of the help has come from increased rail capacity, as I mentioned earlier, and we have year-to-date shipped 6 million tons more grain than we did in the previous year. And I attribute quite a bit of that to the better rail availability due to lower crude and coal shipments as well. And just a pointer towards some of the foreign exchange effects. I talked about that earlier, and it just shows the foreign exchange effect on Russian wheat as an example. And also in the second half of the slide, it includes the price appreciation that is highly unusual that we have seen over the last 2 months or so. So with that background, we'll ease into lentils. And before we talk about the Canadian numbers, I just wanted to set the background on the global lentil numbers. And as you can see on the left-hand side here, global lentil production this year actually went up fairly significantly from 5.4 million to around 6.5 million tons. It gives you the breakdown by the major producers, and I'm highlighting Canada on top here, India, Australia, and then bunched on the bottom we have others. Turkey, India, Bangladesh, Kazakhstan that make up those numbers that I mentioned earlier. So, you know, focusing on some of this production side initially really shows you how remarkable the market has been, and that it has been virtually impossible to actually predict what's going to happen right now when we were in, say, in July or early August. We are looking at a 28% increase in production in Canada. That's all lentil types combined. and the 250% or so in increase in lentil production in Australia, because they finally were out of their drought cycle. So between those two major producers, we have increased production by about 20% or 1.1 billion tons. And of that, Canada fairly consistently, as you can see at the bottom of the slides, provides about 45% of that. And that's, you know, why all eyes are on us, starting with seeding and seeding intentions and then into the production cycle to establish what that base number really is in terms of supplies. So Canada remains very, very important within that. So as I mentioned in the last year, in 2020, the Canadian acres were up around 15% and production was up about 26%. And that's because yields were fairly good last year, better than the previous year. One thing that some people sometimes fail to mention is that supply actually, which combines the ending stocks, the carry-in with the production and perhaps with imports, are more or less unchanged or not radically changed, as you can see in those numbers that I circled. So to me, particularly for the remainder of the year, now that we have arrived in January, the big question really is about usage. Having established a production base, are the exports up or down, and where they're going to go from here? And I'll emphasize right on the beginning, when we look at the export numbers, I'm listing down here, we have been using 2.6 million tons by looking at all the individual destinations. And agriculture and agri-food is still using 2.9 million tons. So that makes a big difference, because our carry-out number ends up around 300,000 tons, which, by the way, is in no way burdensome. That includes all types of lentils, compared to about 100,000 tons AFC is arriving at. And you might say, well, you know, as somebody said earlier, why do we have these people when we don't know the number forward? It's not easy to make predictions on exports by destination either. And I'm just showing you this slide to show you how big some of those swings are, particularly by some of our major buyers. This depicts Indian demand, including our forecast for this year, and demand by Turkey, for example. And you can see that the swings are indeed quite radical, and some of them are induced by some policy decisions in the buying countries. So I would say that post-WTO, the post-WTO environment, world trade environment, has become difficult, in that political decisions are becoming more prevalent, which have nothing to do with the market itself directly. So we have seen volatile import levels by the majors. We can narrow it down in that we know that between India, Turkey, Bangladesh, United Arab Emirates, they take combined already 60 to 65% of our total. And then you have a whole bunch of smaller buyers that purchase from us and or from some of our competitors like Australia, depending on quality and price. So here's the breakdown of our very important export projections. As I said, I've circled the 2.6 million ton number that I'm using at the moment. And obviously we will be refining them as we go along. And if you're so inclined, you know, it gives you the detail by the major destinations. I've also added a column here called shipped year to date to the end of November, because a couple of days ago, we just got the November export numbers from StatScan, and you're absolutely right in some of your resolutions to try and improve on some of the data and the timeliness of the data that we receive. You know, we have already, to the end of November, shipped in excess of 1 million tons of lentils, which is unprecedented. It's a very high number. If you were to prorate that number, we would end up with 3.1 million tons of exports, but that is not going to happen. In fact, you know, my question is centers around India, given that their lentil seeded area in the Rabi crop has increased by about 4%, and they project 1.6 million tons. compared to 1.2 million tons last year, that would indicate that their imports are actually going to slow. And also looking at some of the political events, some of the farmer unrest against some of the marketing changes they're implementing in India, does not look to me like a political climate that would make imports easier of lentils or would change some of their import regimen that they have at the moment. So I could actually say that even though I have a smaller number than last year, that number could still be somewhat overestimated. Turkey is second largest, and they actually have purchased to date about just under 200,000 tons, 190,000 tons. I'm projecting for 50. I think we're well on our way. And it being a very cheap protein food item for the Middle East, I think that number could be somewhat underestimated. Bangladesh, I think, will probably see the influence of the Australian supply, the vastly increased Australian supply. It's one of their major destinations, and so on and so on. And so, you know, this is how I refined the 2.6 million number. And I can state that you will not be able to expect the same pace in the third and fourth quarter as we have seen in the initial days of the lentil campaign. Some people have commented on the somewhat reduced, in quotation marks, export number of lentils in November. But this graph shows you exports by month over the last 3 years. And you can see that even the November number, although smaller than the last 2 months, is still seasonally high. And that was actually very, very good performance by us. And so exports will be very, very good. Will we reach the 2.9 million tons? I'm not so sure. These are year-to-date exports as we have done them so far. We are 52% ahead of last year to date. And there's a breakdown of the various countries again. The red line are the 2021 exports compared to the 2019-2020 exports. So you can see that in some of the key destinations, the initial performance was really rather outstanding. I'm the first person that says in order to get a good grip or good guidance on the lentil markets, you also have to break it down by major type. And I'm showing you here our numbers for the 2020 lentil crop by large green, and I usually lump large and mediums together because mediums are really quite small. Small green crop, the red lentil crop, and some others. So we are working with the 4.4 million acres, about 3 million ton production, and the supply estimate of about 3.1 million ton. When I allocate exports to the various lentils, and starting with the red lentils, we anticipate about 1.9 million tons of exports. We end up and then allocate some domestic use, feed, seed, and waste. We are ending up with about 215,000 ton carryout, which is still quite a reasonable number. It's an 11% stock use ratio. And in general, I say anything below 10% is actually getting quite tight. You know, even with the very large red lentil crop, given that we can conclude the 1.9 million ton exports that I have scheduled, we're doing reasonably well on the red lentil side. When you look at the green lentils, and particularly large green lentils and the small green lentils, I'm allocating combined about 800,000 tons of exports. We are getting into stock use ratios of 5 and 7%, which again, you know, once you get below the 10% level are really quite tight. And that's why green lentil prices have held quite firm in spite of the slowdown in shipment that we have seen before Christmas and into early January. Though I should add that really on green lentils, we are seeing a little bit of life from North Africa and some of the green lentil buyers to replenish the stocks that they bought right after harvest. So in terms of the outlook on the red lentil side, To recap that, the red lentil production has increased this year fairly substantially when we look at both Canada and Australia. There were also some small increases in Turkey and potentially in India, but still an 11% stock use ratio is definitely not terrible. But looking at prices, you know, the one question you might want to ask yourself as well, seeing that we have seen fairly high price levels, what would drive red lentil prices up? And I would say unless we do see some changes in India, we might have seen the highs on the red lentils earlier and will kind of coast for the remainder of the year. There might be some jockeying about new crop acres, and we'll talk about that in a second as well. Large greens, global production was actually down a little bit and supply roughly the same. I would say that a lot of buyers are covered into March, April, partly because also there was some pressure on prices with a stronger Canadian dollar and higher container freight. As I mentioned earlier, we are seeing some activity from North Africa. And you know, all combined, I would say that price movement should be mostly sideways on the current crop, ongoing crop, green lentil side. We will have to maintain decent prices to attract enough acres for the 2021 seeding season vis-a-vis strengthening canola and wheat values. So overall, you know, it's quite a strong commodity environment, which definitely is positive for farmers this year. There are some early new crop 2021 prices out there. We have seen 28 cents for large grain lentils for Sept of these, with 24 cents for number twos, 26 cents for greens, and 25 cents for red lentils. And I must say I was actually pleasantly surprised at the 25 red lentil level. I know there were some 23-cent levels out earlier. These are actually quite decent prices. But I would actually wait with booking them to see how we are doing the jockeying for acres. So the question that I have, are these enough compared to canola and wheat now that we have received another shot on the arm with the USDA report today? So here are some further thoughts on the 2021 lentils, and we try to make some average estimates for various crops listed on the left against variable and full costs. And it's not very often that we see a whole range of commodities cover full costs and a nice, potentially a nice return. Obviously will depend on your yield capabilities and so on. And I can say that green lentils, canola certainly looks very good given the yield assumptions, but green lentils and peas, green peas are not too bad at the moment either. So as we alluded to earlier, some of these prices right now are still very much variable. We will have to look out for canola, though I do think from a rotation point of view, you know, there might be some restrictions. And we will have to look out for wheat because wheat, I think wheat values have more potential going into the spring to move yet. So with that, I'll move quickly into the chickpeas, just some comments here. Global chickpea situation, just in terms of a review, global chickpea production on the left-hand side and then broken down by the major producers. And you can see India on the right-hand side and Australia certainly very, very dominant on the overall chickpea scene. So what happens there matters an awful lot. Although some of the smaller producers I have listed there, Mexico, Argentina, and so on, are more on the Kabuli side. However, you know, a 260% increase in Australia and a 14% likely increase in India does play a role to the overall picture. When you look just at Kabuli chickpeas, you can see that over the last 3 years, we have drawn production and supply down a little bit. And traded levels are down because of that in this year as well. And ending stocks definitely deteriorating very, very seriously on the Kabuli chickpea side. Major players, Turkey, India, Canada, the US, Mexico, Russia, to some small degree, Kazakhstan and Argentina. And basically supply is down in virtually every production region. High prices have slowed trade to some degree. And I should add that in this case, for chickpeas especially, the slowdown in the hospitality industry is certainly having some implications. It's one of the commodities that I would not be able to list on the record demand side, because here we have high prices and the slowdown of the hospitality industry. Ending stocks, however, will be very minimal and provide a good starting point for next year, though Mexican acres are up 25%, expected about 140,000 tons. But I do wonder, as we go forward, what the very high corn and feed grain prices will do to that. Not the same areas, but it will certainly have an impact. This is a stab at the Canadian chickpea balance sheet. We do wonder about the validity or the quality of the carry-in numbers here as well. Supply was up this year in Canada, not globally, as I just mentioned, and both export and usage numbers are up. However, I would say that when you just look at the export numbers, they certainly remain somewhat disappointing to me. 2021 export numbers are the red line that we see here. So globally, the Kabuli balance sheet has certainly tightened. We expect stable to upward prices and certainly a good starting point for next year. Although, as I said, some of the other commodities will provide very, very strong competition for acreage. Just some comments on faba beans. I know they're not a huge number of acres in Saskatchewan. I think personally it's a very promising crop. And just a very quick view on where the major faba bean production occurs in the world. So the darker the color, the higher the production. Certainly Australia out there and China, as well as some of the European countries are very, very dominant. Here's a slide showing faba bean production in terms of an average between 2005 and 2019. So China, very dominant. That's the purple piece of the cone, followed by Ethiopia, UK, Australia, France, Sudan, Germany, Italy, Lithuania. Canada doesn't even make that list. So very varied production. And it's very difficult for us to go into the export market and particularly into the edible export market, which is dominated by Egypt, as you know, which buys up to 550,000 tons at the peaks out of a global import volume of about 750,000 tons. The top exporter these days is Australia. And, just like they had a very, very good crop on lentils, they also had a very good crop of faba beans this year. And they are certainly looking at increasing ending stocks and have been lowering their export prices. So Australia, France, UK, they compete for this Egyptian edible demand. And we also have an uphill fight in terms of quality. And in general, the Australian faba beans are viewed as the highest quality by the main importers. And it's difficult for us to push into that window. I would suspect that the greening policies, as they're called in Europe, which are supportive to pulse crops particularly, in terms of efforts to be more sustainable in farming, will benefit that production in the European Union going forward as well. In Canada, the issue sometimes is insect damage, quality, and also utilize a short export window, these Jan Feb, vis-a-vis European and Australian production coming on stream, which can be difficult. Having more rail cars actually should make that easier. So I think the edible demand will remain difficult from the Canadian point of view. Current values about 870 delivered plant Saskatchewan. I have not seen new crop values yet. I would suspect they come in at 750 to 775. Just a slide summarizing some of the export destinations again. And with that, we slide into the Canadian faba bean balance sheet. And I like using it in this form because it shows you how recently, as recent as 2010, I was trying to use my pointer here, we were very small players. You know, with a peak in 2016 and production moving up again in the last couple of years. I've circled the domestic and usage and the export numbers, both are pointing upwards to some degree. And I think that's very promising in terms of the developments in usage. Production this year was about 125,000 tons, which was up 16% to the previous year. And stocks or supply was up about 23%. We think exports will rise to about 40,000 tons, and I put in a very ambitious domestic use number of 70,000 tons, which would bring a carryover actually down to very reasonable levels. And the domestic usage certainly focusing on the feed side. And I think we have about an edible demand of maybe 15,000 tons domestically. So I think the focus on the feed environment is very positive, given increases in corn prices and so on. I think longer range, we'll also have some chances to develop fractioning for faba beans because of the higher protein content than peas. I think some of the fractioning people are actually looking at that and experimenting with that. So I would say that longer term, I think there's a good future for soybeans as we keep developing those markets. My bias would be to have a focus on the feed and fractioning applications in terms of variety development, for example. Just some very quick general thoughts to wrap up. Old crop prices, I think, are unlikely to increase very significantly on lentils, for example, because we have seen some very strong and high markets. But we will see some jockeying for the new crop acres, which might become very interesting. The long-term demand outlook is very good for pulses in general. We do know that meat demand is declining and demand for vegetable protein is only increasing. And so with that, I think the 2021 crop outlook on the pulse side in general is very positive, as we're well positioned vis-a-vis the demand changes, vis-a-vis the COVID demand and environmental considerations in a few years' time as well. So with that, I turn it back to you, Chuck, again, to continue with the piece.
Okay, thank you, Marlene. I will share my screen now, and we will get the final presentation of the day. Oh, I just have to find it now. Find it on my, there we go. So in this presentation, I'm going to cover peas, dry beans, and soybeans. And Marlene did talk about did cover soybeans quite well this morning, so I may move through that part of the presentation fairly quickly. Is the screen share, could someone let me know if the screen share is working properly right now? I'm having...
It is not.
It is not, okay. Okay, good thing I checked. Where are we now? I could show you all my spreadsheets, but that would be... There we are. How's
Looks
that?
great, Chuck.
That's
Yep,
better?
looks
Okay.
great. Yep.
Okay. I knew I couldn't get through the day without something happening. So as I mentioned, we're going to cover the remaining pulses and soybeans, because Marlena did a very good job already earlier today. Depending on time, I may move through that fairly quickly. So again, for each of these, I'll look at the rest of this marketing year and then also the outlook for the coming marketing year, and see if we have some crystal ball moments, or some maybe just some tea leaves, read the tea leaves for next year. So in terms of the current marketing year, we had a crop, we had a larger pea crop, but as Marlena mentioned about lentils, the same thing applies for peas, is that really you have to split them into different categories to get anything meaningful out of the production numbers. So in essence, we had a much larger increase, a 30% increase in green pea production in 2020, whereas yellows were only up 4%. And then the other minor classes, although those numbers are always a little iffy, were up 13%. That would include things like maples and a few others. So that's the production outlook. And so largely what we have is that type of a situation. It would help explain why the premium, the green pea premium, has really shrunk, and in some cases now is running at a discount to yellows, and that's something that we have been expecting would happen at some point. It took a little while longer than we thought, but really that's been the picture for that price spread between yellows and greens. In terms of other exporters, there were no big swings in production. What we saw is Ukraine was wanting to produce more. They had, but their crop conditions were such that their yields came in lower. So for the most part, among major exporters, volumes are within reason of the last couple of years. So no big differences there in 2020. But the question is what might happen in 2021. So we'll talk about that a little bit as well too. In terms of Canadian pea exports, so far this year, we had a massive September. There's always a spike in September, but this year's movement was exceptionally large. Because China is our major buyer now, I had expected more steady, even movement throughout the year, but that turned out to not be the case. Now we've moved back in November, and partly that's because China did stock up so heavily in September and October, and that they're able to back off a little bit. In December already, we know from the CGC data that volumes are up a little bit again. And so expecting a fairly steady volume for the rest of the year. And those gray bars that you see off to the right, those are largely what is possible given available supplies. So it's not a picture necessarily of demand, but that's about how many peas we can export given our available supplies. Here's what's been happening with China, and so that's been the whole market, almost the whole market, essentially, at least for Canadian peas. And of that total, and likely will hit 3 million tons by the end of 2020, when the December numbers come in, we'll see we'll have hit 3 million tons in China. Over 95% of that has come from Canada, and so that's great news. But as we've heard and seen in a number of other crops, China is looking to diversify its sources. Just like Canada doesn't want to be dependent on a single destination, in this case China doesn't want to be dependent on a single origin. So they are looking for other opportunities. So there are reports that Ukrainian peas may be able to move into China in the future as phytosanitary barriers start to come down. That's not going to affect this year's market because Ukraine has essentially run out of peas already, but it could be a factor for the 2021-22 season. In terms of India, because people are always going to ask what's going on in India, and nothing. India is largely a non-factor in the pea market because they have restrictions, quantitative restrictions, not just import tariffs, but quantitative restrictions. They do allow a small volume of green peas and a small volume of dun peas. That's largely from Australia. But for the most part, they've shut out yellow pea imports. And so that's, and I don't expect to see that changing. In case anybody asks that question, I don't expect to see Indian pea imports improve in the short to medium term. And there's a couple of reasons for that. One of them is that crop conditions in India this is a satellite vegetation map compared to average. And I've seen some maps that show rainfall deficits, but it seems that, and I've talked to people in India, it seems like they've had the right amount of rain coming just at the right times. And so some pretty good looking Rabi crops so far. The pea acreage is up over last year, or up over average, I should say. I think it's 12%, and so is chickpea acreage up. So Desi chickpeas, which are the substitute for yellow peas. So I don't see an immediate threat to the Indian crop, and that oval, by the way, also includes the areas where they grow lentils. So further to Marlena's point about lentils. One of the other things that's happening, though, is these are pea prices in Western Europe and also soy meal prices. And so feed pea prices in Western Europe have been rallying very, very strongly, are still well behind the soy meal market. But that's been pulling in peas from Ukraine and from Russia into Western Europe, and essentially as feed ingredients. And it's almost to the point now where Canadian peas could start to work into European the European feed market, even at our yellow pea edible prices. So it's not too far from reality that could happen. I'm not saying it's going to, but just that threat of European demand could force other buyers to up their bids as well. When we look at the ending stocks for this year, again, the yellow pea crop was only up 4%, while the green pea crop was up even considerably more, 30%. And so I'm expecting the tightness to continue to show up in the yellow side of the market, while greens are going to struggle. Not that the supplies are burdensome or that type of thing, but certainly yellow is going to be the more favorable in the second half of this marketing year. In terms of some seasonals, I like to throw in these charts. In terms of seasonals, what we have, you can see that even though yellow pea prices really did rally strongly, more strongly than people expected, it still was largely following the seasonal pattern. And so that's reassuring, I suppose. Generally, the normal seasonal pattern is roughly sideways until we get closer to the next crop coming in. This year, I think we'll probably see a little more strength than what the seasonal chart will show, just as those supplies tighten up. This chart shows some longer term yellow pea prices, and it's always reassuring to, or it's helpful to look at, to get some longer term perspective when we look at these. So you have yellow pea prices now that are in the $9 plus level now. This is an average across the prairies, and it's probably a couple of weeks old. So you have $9 plus. We've had significantly higher prices a number of years ago, and those were just fabulous. But we are into that. People sometimes divide up the market into thirds. We are now into that top third of the market. And if you look at one more way of looking at yellow pea prices, if you look at how often at the time, the average when this chart was done, the average yellow pea bid was $8.75. If you look at how often those prices have been above $8.75 over the last 10 years, it's about 15% of the time. So we're getting into some fairly rare air when it comes to yellow pea bids. Not to say that they can't hit those higher levels, but as you get closer and closer to those levels, it's more and more unusual, and then you need more and more unusual demand to push them up even higher. When we look at next year, my forecast is we're looking at roughly steady pea acres, but that's kind of masked a little bit, or it masks the differences for the two types. So I think as we see yellow pea bids, new crop yellow pea bids firm up now, well above $8 in a lot of cases, I think that's enough to drive up some acres for yellows. But if greens are showing only a small premium or even a discount, that's going to mean that green pea acres are going to drop down. My experience tells me that you need roughly a $2 a bushel premium to get more green pea acres at the expense of yellows, and we're certainly less than that, much less than that these days, and could get even further. So more of a drop in green pea acres. So what that does is it helps rebalance the supply situation to what is really needed. So what that means is we're going to be carrying in very few peas into next year. So if we have an average yield, and that's what we use at this time of year because that's the best odds for next year's yield estimates. With an average yield, we'll leave supplies roughly steady. But again, a little more yellows, a little less greens as we get into next year. So a more balanced supply situation for next year. When we look at export forecasts for, well, let's look at this chart just in terms of, it helps demonstrate how the Canadian pea export situation picture has changed. If you look back 5 years ago, India, of course, was the dominant buyer, and that's all we could talk about. And then you can see how sharply that demand has dropped off, those light blue bars. But then you also see the red bars which show China. And so that's how they have dominated Canadian demand. So I think what we'll have next year is that export volumes will be restricted by available supplies. So it's not like demand is really going to drop off. And there's a few reasons for that. One is that Chinese fractionation plants still need to keep running at the levels they are. And the feed market in China and elsewhere has been so exceptionally strong, and there are signs that that's not going to change with soy meal and corn supplies and all of those kind of things, that's not going to change next year as well too. So it'll also pull peas into that feed channel in China and elsewhere. So it's more a situation where we won't have the supplies to keep up with the demand. The other part of it is that we're expecting some increase in domestic processing, and the processing numbers or the domestic use numbers that we get are somewhat obscured by this feed use and the residual calculations that we have. So that's, but I do expect to see, roughly 100,000, maybe a little bit more ton increase in domestic demand. And then as we go forward, that should, into years beyond that, we should see even firmer, even larger increases in that. So that helps take away a little bit of the risk from relying on the export market and particular China. So what I'm looking at for next year is we have low stocks this year, similar to last year, and could get even a little bit tighter yet in the next marketing year. And so that's generally favorable for prices. So if I boil some of those things down, we'll have tight supplies for the rest of this year, tighter for yellows than greens. But prices are also being supported by the feed and the meal markets, not just domestically, but in export markets. So I think there's more upside possible, and particularly for yellows. Greens, I'm not holding out as much hope. For next year, with a modest increase in acres and an average yield, supplies are going to be flat. Chinese demand should remain strong, but there's always a bit of a nervousness, at least I have a bit of nervousness when you rely so heavily on one country. But the other thing to note for next year is that other exporters will raise acreage. And probably places like Ukraine and Russia especially if they get access to the Chinese market, they're right now, they are also seeing very, very strong bids in Ukraine and in Russia, old crop bids, and that should encourage that. And I don't think they have the rotational constraints in terms of plant diseases and those kind of things that would tend to limit acreage in Canada. So that's another limit on Canadian acreage. So we could see increases, particularly in the Black Sea region, and then maybe some other areas as well too, based on some strong prices. Although, as we've said numerous times, is that there's very, very strong competition for acres. So no particular crop is going to run away with acres next year. In terms of dry bean production, this is what we had these are the last 2020 production was a record crop, or sorry, the most acres since 2005-06. Pinto acreage was up 53%. Black acreage was down a little bit. This chart also includes our 2021 acreage forecast, which calls for somewhat of a decline, partly due to more competition from soybeans in southern Manitoba and Ontario, but also lower prices than we had at last year at the same time. What we had, though, is we had according to StatsCan, is we had record yields and a record crop. So just a massive crop of 490,000 tons, I believe. And so it initially started to look like, oh boy, we're going to be massively oversupplied. And so that was one of the signals. And then the other one was in the US. And so I was just frantically updating these. The USDA released them today. I was updating these earlier today. And their crop is up 58% from last year as well, too. And I think it's a new record as well, too. And so there we have a large increase. And for pintos in the US, production almost doubled from last year. Last year was a real gong show in terms of the crop. But this year's crop, not only up from last year, but much larger than usual, than average. So we have those kind of Canadian and US dry bean production. And of course, the US dominates because it's a much larger crop, and they are one of our largest destinations for exports. So that initially looked extremely burdensome. And yet at the same time, prices have moved higher, and I'll show that in a second. But what we had is we had almost no beans left at the end of 2019-20. So exports were very, very low through August and much of September. And then they've taken off in October and November. So running at over 40,000 tons a month. But because we've had such a large crop, it'll need to keep running at that strong pace. So the question is where those beans will go. And like I said, the US and Europe are our two largest buyers by quite a wide margin, but we're seeing signs of potential strength, potential demand coming from Latin America. So that's very, very positive. And one of the reasons is in 2019, the Mexican summer bean crop was at the lowest it had been in years. And even in this summer crop, acreage responded, but yields didn't. And so a substandard crop again in Mexico in 2020. And so now they're planting their winter bean crop and should see an acreage increase there, but more demand coming from there. I don't have charts for Argentine production, but there are some serious issues with the Argentine crop and also the Brazilian crop. So as the year winds, as we get further into 2020-21, we should see some demand coming from there. And we've done that kind of business in the past, but it's fairly unusual for it to be quite large. Often we're backfilling supplies into the US as they export to Mexico and so on. So when I mentioned about prices, what we have is we had that sharp drop off in bids for, we had these extremely high prices through the spring and summer. Then, of course, as we got close to the expectations of this much larger crop, prices dropped dramatically. And but since then, both in Canada and in the US, seen a very strong price recovery, and it's happening faster than I had expected, and to a greater degree, especially when you think about production increasing by nearly 60% in the U.S. You would expect it to remain weak. So what that tells me is that the export demand is remaining strong and is allowing those prices to recover, and frankly some pretty decent new crop bids to start out as well too. So the new crop bids generally for black and pinto and navy, those are the main types, are close to where spot bids are right now, or right on par with them. So this is a look at the U.S. Seasonal pinto bean price. So we're already recovering. So we've followed that trend very closely this last year, and now we're starting to move higher. And generally, so what we see is that prices do move higher in the early calendar year, and then peak as supplies tighten up later in summer. So just in terms of a few summary points, much bigger Canadian and U.S. crops, but smaller Mexican and South American crops. So we're fortunate that after having grown this big crop, we happen to have a market for them. So otherwise, I think we'd see much weaker prices out there. I think 2021 acres could slip back a little bit, but maybe not all that much, and that will allow prices to remain firm as long as we do that. I'm looking at the time right now, and I'm wondering whether someone could give me guidance whether I should try and cover soybeans yet, because Marlena did it earlier today, or whether we should just go to questions. Anyone want to chime in with some thoughts on that? Hearing nothing, I'll try and plow through unless I quickly hear something from someone else. Canadian soybean production, smaller crops again, largely in Western Canada, and that's no surprise. But of course, next year we're going to see an increase, and I'm going to flip through these fairly quickly just to, again, in recognition of the time. Canadian soybean exports have really moved sharply higher, but almost all of that demand is moving east. And so Western Canadian movement, frankly, has kind of been poor so far this year. But if China keeps needing soybeans, we could see that improve later on in the year. But what we had this with just this latest USDA report, what you see is you've got supplies dropping in the last couple of years, and usage dropping as well too. And then for this marketing year that we're in, a sharp increase in usage, and frankly, almost everybody was surprised by that, by the biodiesel demand, by Chinese demand, and so that was largely a surprise. And so some record consumption this year when most people had not predicted that. Chinese soybean imports started the year slowly, and there was all kinds of concern. But by now, by November, they've actually hit a record pace. And so that was another one of these unexpected things in the soybean market. The USDA dropped its soybean ending stocks today to 140 million bushels. I think it was 175 or 185 or something like that before. But you can just see how quickly that market has turned around from absolute massive supplies to very, very tight ending stocks. South American soybean production. The world needs record crops and bigger record crops. And now there's question, the USDA dropped Argentina by 2 million tons today, their crop. They left Brazil unchanged at 133 million. But there's some questions about that. But record crops aren't a problem because demand is still growing, and not just China, other places as well too. These are soybean prices in a whole bunch of different markets, and so the rally is not just driven by meal, which it normally is in soybeans, but it's driven by both oil and meal. And then of course the oil picture is what drove what are we at today for canola? 687 on the March, up another $14 today. So that's it's just good news all around, except for our Western Canadian soybean basis. It just sucks, frankly, and that's largely because the Chinese demand hasn't started pulling soybeans out of the prairie provinces. And so we're kind of stuck with these soybeans right now. And most of the movement exports are out of Eastern Canada, but I expect that that's going to change simply because now those Western Canadian soybeans are attractive to importers. So the outlook is market is on fire right now, tight US supplies and South American concerns. Maybe it's overvalued, maybe we've overdone it. When we have these parabolic markets where they kind of go up like that, that makes me nervous in canola and in soybeans. But we could see an improvement in basis if we get movement to the West Coast. And then the question is, of course, how are acres going to respond in 2021, especially in the US? Right now, that soy-corn ratio that we often talk about is at about 2.7, which should push more acres out of corn and into soybeans. So I quickly made it through. Oh, I think we do have time for a couple of questions. So I will stop sharing my screen and see if there's any questions here. Oh, 14.25 US soybean price. What's a fair price? Well, as I said, the basis levels right now in Western Canada are very poor, and so I expect even if the futures price kind of works its way sideways or even dips a little bit, there's room for the basis to pull Western Canadian prices higher. Another question, will Ukraine yellow peas typically be good enough quality for Chinese fractionation? Possibly. If they don't go into fractionation, then they would go into the Chinese feed market. So I think that's a question there. Where does soybeans fit on the SAS crop margin scale that we've done before, that the gross margin? To be honest, things have changed too much from when I last did it. So I don't even know. They weren't looking good when I did it in middle to late December. But of course, it should look better. The problem is again, the basis levels in Western Canada are just very poor. So that's keeping it from looking better. If you want to look for some new crop bids, they will look good, but the basis is still just awful. When do you expect the basis to increase? That's I honestly don't know. Soon or a lot further out into June or July. It could be a little bit later. If we think about when seasonal basis on canola strengthens, that's April, May. Maybe that's a time where we could start to see that. But yeah, I mean, it's even possible. The problem with Western Canadian soybeans is that the protein content is lower. So they will run at a discount regardless, but that we're just unusual now. Would you agree that the record production of edible beans is a bit misleading due to the widespread early frost that resulted in low quality plow down of acres? I'm guessing that's, you mean 2019. Well, we had almost none. Oh, we had almost no dry beans left at the end of 2019. So there were very, very low supplies regardless. So yeah, comparing it to last year is probably a bit of an unfair comparison, I suppose. But even then, a very, very large crop, record crop in Canada, record large, almost record or close to it in the US. So not small by any means. Why is China currently not importing green peas at near even money to yellows? Seeing fall 2021 trades for yellows at strong values as feed and human grade. I think they will. I don't think they've seen green peas for their fractionation. I think they're kind of used to running with a certain type, although they will change. They certainly will change. But it's taken, the last time we had green peas at a discount to yellows, it took them a little while to make that adjustment. So it may be just a matter of timing before they start to do that. So I think I must be out of time.